Hello everybody, this is Daniel, and I want to thank you for joining our commercial loan consulting training part 1 tonight. We're going to show you how to originate some loans, how to make some money, and how to help your fellow real estate investors. So, a little bit of background about me. I began investing in real estate at 24 years old, and that was, believe it or not, 25 years ago. I began originating loans about a year later, and after rehabbing a few properties and originating loans, I realized that I could earn more money closing loans sitting in my air-conditioned office in the summer heat of Chicago and not pounding a hammer. So, basically, I was a young man. Believed in real estate investing and have continued to invest in real estate all these years, but I learned really quickly that the money was not in, that I could make more money in the financing, and I could do more volume. I mean, I could close 10 loans a month or 15 and eventually hundreds of loans a month, and I've never been able to do that with real estate. So that's why, that's the golden rule number 1, that the money's in the financing, and I'm going to share with you how you can earn some money in the next 12 months with financing. Okay, so what's the state of the industry in 2013? Well, obviously we know that real estate is starting to move. I'm here in Las Vegas, and real estate was up about 14-15%. We really have no inventory. There's a lot of inventory still stuck in the banks' foreclosures, and there's still a lot of stuff because they had this crazy law here that stopped foreclosures for a year because of the robo signing. But basically, when people put up a house for sale, they're getting 4, 5, 6 offers, and new construction is started again, believe it or not, in Las Vegas. So if you're coming here and you don't want to be involved in buying a short sale because you never know when you're going to get the property, or you never know what the condition of the property will be in case it gets vandalized, people are buying new homes, and it's great to see that happening. As a matter of fact, just this week, a group out of Malaysia purchased a land that I could see right outside my window, in between the Wynn and the Encore, called the and this property, they just purchased it, and they're going to build a $2 billion casino with a miniature Great Wall and stuff like that. So that's great news, and I'm sure in your town, hopefully you're seeing these signs of uptick that's going to help us get out of this mess that was created a few years ago. But here's the real situation. In spite of the fact that the real estate is moving, there's still about 80 million people that are locked out of bank financing for real estate. And they're locked out because of many reasons. They could be locked out for credit. They can't prove their income. They could be making income, but they can't prove it, so they're locked out for that. They have bankruptcies or foreclosures on their credit reports, and basically because there's a lack of financing. I mean, right now you basically have Fannie, Freddie, FHA, Ginnie, and then you have some banks doing some portfolio lending. There's no securitization going on. There's no subprime lenders, so there's basically the agencies and private lenders. So we're in a perfect storm. There's a lack of real estate financing, and we have people, investors, with trillions of dollars of money sitting in their retirement accounts, in their mutual funds, and in their CDs, earning less than 1%. So why should you become a commercial loan consultant? Well, because investors need financing to fuel their buy and hold or their buy and flip strategies, and because you can earn huge commissions. We're talking about being a commercial loan consultant, and the reason why we're encouraging you to do this is because licensing. Basically, as a commercial loan consultant in most states, you don't have to have a license. If you were doing residential, where people are buying a house to live in, you would have to follow the regulations for that and get a license. But because you're doing, and we're encouraging you to become a commercial loan consultant or an affiliate, you can earn commissions without having to go through licensing. So, as I stated before, I started out, some of you know from previous webinars, I started out at American General Finance. That was my first job, $12,000 a year. Making waterbed loans and motorcycle loans at high interest rates. All these companies that were around, American General and Household Finance, had been around for, 50 to 100 years. They're all out of business. The Countrywide, AmeriQuest. So these dinosaurs are extinct, and because of that, that's the great opportunity that exists for people like us that can put private money together and lend it out to the thirsty real estate investment community that's looking for financing. Once again, as you can see by this example, passive real estate investors are being crushed in America. They're earning 1% or less, or maybe 1.5% if they lock in for 5 years. Could you imagine locking in your money for 5 years to earn 1.5%? Inflation's at 2%, so you're basically losing money by locking it into or leaving it in CDs or money market accounts. So now is the best time to be selling money. And if you're a real estate investor, it's still a good time to be buying real estate. Depends on the market. Here in Las Vegas, the investors are crying because the margins are so thin. You know, maybe they buy a house, fix it up, sell it. They're only making 10-15% on their money, which is still phenomenal. But considering all the work that's involved, all the time, all the risk, all the money, it's really a challenging, it's not a great return in my opinion, and I think they're finding that out, and maybe in your market you might know this too. But if you go to certain parts of the country, we still see people taking advantage of the arbitrage or the profits that do exist in cities like Chicago or Houston or even in California. There's still a lot of great bargains in some of the bigger cities. So what kind of loans do we do? And these are this is an example of a loan we close. And I'm going to go through the loan program guidelines. I'm going to show you where you can download the information on our website. But this is a loan we closed. It was a 2-unit building in Waukegan, Illinois. It was a $50,000 loan amount. These people had a 580 FICO score. We didn't require any income docs. We didn't require any seasoning. We allowed them to close in their corporate name, and they had a past bankruptcy. And why did we lend on this property? For many reasons, okay? Number one was, I think, obviously, if you could tell from this example, our loan to value is 50%. So we have 50% loan to value. We have 2 rental incomes. So if we ended up taking back the property, we got an income producing property that we paid 50 cents on the dollar for. And that's a lot of ways that we think when we make these loans. It's basically when we make a loan to somebody that has low credit scores and can't prove their income, it's like, well, if we took this property back, is it a good price that we would have bought for it? And in this case, it's a solid brick building. Waukegan is just about an hour north of downtown Chicago, without traffic, rush hour traffic, of course. Anyways, let's go to the next loan. The next loan was a loan in Ohio where basically it was a no money down loan. The borrower bought a restaurant and he used his free and clear property to borrow $55,000. Now the restaurant appraised for something like $80,000 and the house, the 3-flat, appraised for $80,000. So we had $160,000 in collateral, and we collected monthly rents of $1,700. So we cross-collateralized both properties. Once again, the FICO score on this was pretty low, so it's a no money down, low FICO score. And people call me all the time and ask me, can we do no money down? We cannot do no money down if you're buying a property and you have no money to put into it. But if you have another piece of collateral and you're willing to cross-collateralize, we do this often. Here's the type of properties that we lend on. Non-owner occupied only, starting with a single family from 2 units to 300 units. We also like to do fix and flip. We just closed one in Chicago today, which is a rehab fix and flip. Any investment property combined, commercial investment, mixed use from 5 units and up. Commercial properties, retail, industrial, and we've actually did 2 land loans. And it's funny because we said at the beginning of last year we will never do another land loan, but the truth is we're not doing big tracts of land. We're actually doing loans, infills, where there's not a lot of land or not a lot of available land in areas where people can still build a house at a profit and want to live safe areas. So we're very flexible as long as we feel like once again, like if we took back that property, was that a good price to pay for it? That would be the part of the lending criteria. Okay, so loan programs and rates. If you want to see our rates and our program guidelines, you can download those at our website. There at the bottom, it's privatelendinggroups.com/rates-sign-up. So if you go there, you can sign up for our rates, and then once a month when new rates come out, you'll automatically receive those. But here's the highlights of those programs. We have non-owner occupied investment properties. We do 1 to 5 year terms. 70% maximum loan to value. So somebody asks, well, how much money down? We require 70% skin in the game, or another piece of property that you own free and clear or with a lot of equity. We have rates starting at 10%. Just quoted a customer and had him on the phone before the conference call, and basically they got it was a commercial deal for $700,000. We quoted them 11 and a quarter rate, and they were asking, couldn't we go down 1 more percent? So I'm glad that we finally got some great rates, because 2 years ago the rates were double that. But the rates start at 10. They average about 15, 16. But it really depends on how good your credit is. I mean, remember, we're not doing all 700 credit score customers that have jobs. A lot of our people have bankruptcies, foreclosures, and I'll go over that. But because they have the 30% down or more, we're very comfortable with the decisions we've made. We'll also lend to you in your corporation. We'll lend to you in a land trust, a business, a retirement account. We've got that request now, so you can buy property inside your IRA, 401k, Roth IRA. Here's the golden rule. So I just said that we go to 70%. We do go to 70%, but the golden rule is basically 65% loan to value. The 65%, that's the loan that will go out. The other 5% covers closing costs. So we try not to ever violate this rule. If we do this well, we feel that our investors are sharing the risk with us, and that we will not make bad decisions for our investors. There's 2 types of real estate investors that we're looking for that you could help us and make some money on. We're looking for active real estate investors. Those are the people that are buying and flipping, and also the people that are buying and holding. And we're looking for passive real estate investors. These are people that have money, they want to put to work, they don't want to earn 1% or 0.5%. They'd like to earn 10% or more. And with us, if they invested us, that's what our investors earned last year. All of our investors earned greater than 10% interest by investing with us last year. So, how do you find borrowers? Well, the easiest and fastest would be through your own current database of friends and clients. Depending on what business you are in, you should have clients or friends. If you're already in the real estate industry, a realtor, a mortgage broker, well, you got a database of people that are looking to take advantage of properties, or maybe they own properties already. That's the first place to start. And obviously you can leverage that through LinkedIn, and you could leverage that through Facebook, because that's where your friends and many of your clients are. Where we get a lot of business from off the internet, and it's free, is Craigslist and Backpage.com. You could list ads in your neighborhood requesting or letting people know that you're offering financing under the financial services section. Run those ads and have people calling you, and you can pre-qualify them for loans. The next area that you can find borrowers is the real estate investment clubs, and there's 2 types. There's obviously the local, and then there's the online. If you have a local real estate investment club that you're part of, that would be a great place to start. Put a flyer together, go visit your peers, go to the meetings, find out what's going on, share with them that you have a source of money, and that's as easy as it gets. Another great place to start getting borrowers is through the internet, and we like Google AdWords. We're spending about $2 a click for getting people to come to our website and landing pages. And think about this. I mean, if you ran an ad in the newspaper, a small ad would cost you $500, and even or more in these newspapers. But on AdWords, that same $500 can get you 250 visitors to your website or landing page. You only need, 1 closing to more than pay for your advertising. So we use Google AdWords. That's why I told you earlier that a lot of our business comes directly to us. Public records. There are lists out there of people that have bought property for cash. and you can look them up. And if depending on how big your city is, another good place to look is in the city building code violation courts, or whatever they call it in your area. Back in Chicago, we have the city of Chicago lists all the people that have building code violations, so we can look them up and mail them and see if they have a property with equity, and see if they need help getting some financing. Also, last but not least, is the professionals out there. Attorneys that do real estate closings, accountants, and home improvement dealers. All throughout my years of doing loans, this has always been where we received many referrals. Okay, so we help, as I stated earlier, we help both active and passive families, and we get paid for helping them. And if you can refer those people to us, you can be paid also. Here's how you earn some money. Here's how affiliates can earn money: by finding people who need money. They found great deals, but they need money to close the deal. Also, people who have money but want to place it in a higher yield secured investment. Selling money is easy. Here's what you do. You find a borrower or a private investor. You send us the information, either a loan request or their investor info, at the email below, or you can fill out an online loan application at the URL below, which is basically our website, www.privatelendinggroups.com/apply. And there is a section in there where you can fill in your name so we know where the deal came from, so you can be compensated. So how do you get paid? You get a percentage of the points that are charged and the borrower pays, and that we receive at the loan closing. And you earn income for as long as your borrower investor is investing with us. So if the borrower borrows one loan, or gets one loan this year, and at the end of the year gets another loan, you'll still get paid for bringing that person in the door. You can also earn commission on anyone you bring in directly to the company when revenue is generated through our training products, loans, and passive cash investors. Now we're working on our affiliate site right now, and hopefully by the next time we do the next online training, you'll be able to sign up for the affiliate tracking. And basically, you'll have codes and cookies you can put on your website, you can put in your emails, and if anybody goes to our products, like our commercial loan consulting training program or our private mortgage training program, these are online membership sites. If they go to those, you can also earn up to 65% commission on our training programs. But I'm not going to go into, that's not why you came here tonight, but I want to let you know there are more than one way to earn some really great money by working with us. So to give you an example of how much money you can earn, when we close a loan for $200,000, clients would pay about 5 points, which would equal $10,000. Your commission can be as high as 25%, and so you would earn, on this example, a check for $2,500. If you find us the borrower and the private investor, you can earn half of the commission, so you basically can earn $5,000 just from one loan transaction. So think about this. If you can just do one loan transaction, or find us one good borrower every month that has an average loan amount of $200,000, you can earn about $2,500 each time that happens. That's very good money in yesterday's economy and in today's economy. So who is the Private Lending Group Commercial Loan Consultant Training Program for? Well, first of all, I want to let you know that we're not requiring you to buy anything to get paid. You get paid more once you become an official commercial loan consultant and go through our training, but we do pay you for referrals even without you becoming a commercial loan consultant for Private Lending Group. So this is really great for, as I went over earlier, for passive investors. If you know anybody that has money sitting in a CD and they're only earning 1%, not even just a CD, but a retirement account. We were at an IRA convention conference. It was a conference a couple weeks ago, and they stated that out of all the money that's sitting in IRAs, self-directed IRAs, Roth IRAs, retirement accounts. Something like $1 trillion is in those accounts, just sitting there in money market accounts. So it's sitting there making 0% interest. And as a passive investor, they can earn at least 10% interest on some very low loan to value loans. So if you know anybody that's sitting on money in these accounts, whether it's their retirement account, their CDs, you really should have them talk to us, and we could show them how to put that money to work. You can earn a commission for helping do that, and it could be a win-win-win situation. Motivated individuals, people who want to get paid for helping real estate investors, developers. We can help developers and across the nation with busted developments, commercial and investment properties. There are so many unique situations that come across our desk every day. You would think that after 25 years that I've seen it all, but no. I'm amazed every day, and I love it because we keep learning and keep helping people. Active real estate investors. Obviously, this is the #1 target. These are people who are looking for money to help fuel their business for whether it's buy and hold or buy and flip. Last year, primarily, we did buy and flip. We did mainly 1-year loans. This year, we have the ability to go out to up to 5 years. So depending on what the needs are, we definitely have a better product selection as we head into 2013. The benefits of being a commercial loan consultant. There's no limit to how much you can earn. You can work from home. You can work from anywhere. You can work from the golf course, the beach. Work. Okay. You can also have no overhead. I mean, there's basically you already have a computer and a cell phone. You're in business. There's no inventory. There's no products to buy. And there's no recruiting. This isn't one of those types of businesses. So that's pretty much what I wanted to go over, and I'm going to open it up for question and answers. If you are interested in getting a commercial loan consultant training, certification, and also being able to earn the higher commissions, there is the link below. I'm not trying to push that on you, but the people that are doing that are making really good money. And really what I just wanted to share with you was that there is a great opportunity now, greater than in the last couple of years. I mean, as we said, real estate is coming back. We see it in all different parts of the economy. And now's a great time to be out there selling money. I mean, when I started selling money 25 years ago, I had a lot of lenders that I could send those deals to. And because of that, I made a good living, but there was less, there was plenty of lenders, so I had to be competitive on my pricing because there was, a mortgage broker right next to me that could sell the same product. Today, you don't have that many lenders. You have basically private lenders are very local in the way they operate. In other words, they're local mom and pop shops. Most lenders lend in their own city or state first, and then they branch out to a state to the right or the left, the north or the south. And private lending groups, we've been lending nationwide. We started lending nationwide or multiple states back in the late 90s. So we're very familiar. We understand the rules and the regulations. And because of the internet and because of how we can go to Google and check out a property, we can get valuations. We can get title reports within seconds, minutes. All right, we'll call it minutes. It's very easy to evaluate the property and decide if it's something that we want to invest in. So that's basically it. I mean, it's not hard to find borrowers in this environment. Obviously, we want to help as many borrowers as we can, but they have to qualify. And the main qualification is they have to have a lot of equity, so we're not taking on the greatest risk. So if you have any questions, you could type them in now. If not, I'll answer them tomorrow. You can give me a call at the office. And I hope this helps you in your training. Let's see what we got here. Okay. So one of the questions from Texas. So you will protect the broker and we will get paid at closing. Yes. Here's a basic rule about we need to talk to the borrower right away. Yeah, whatever we do, we protect you. Um, we're very thankful for the referrals. But some of the things that we learned in the last 12 months was that sometimes somebody brings in a deal that they got from somebody else, that they got from somebody else, and you got this whole broker chain going on. So our basic rule is, if we need to talk to the borrower within the first, few days, or it's not really a deal. I mean, we don't want to spend a lot of time pricing and shopping the deals if we don't really have direct source to the borrower, because too much stuff that I don't like and we don't like gets in between us and the borrower, and we really like dealing with the borrower, and because we want to tell them the truth up front. I mean, we've been doing this. I've been doing this 25 years. Steve's been doing it for almost 20 years. We don't need to BS anybody. We just want to. We tell people if we think we can get it done, and if we can't, we tell them we can't, and we tell them what we think we can get it done for. And if they like it, they like it. If they don't, they don't. But we don't promise them that we can get them and deliver something that we really don't think is available. Okay. Hope that answers your question. Are there any states you have restricted or not lending in? That's a good question. We're trying to lend in states, every state. That's really the goal, and it's all based on loan to value. I mean, I'm going to give you an example. We have a deal in South Carolina that's in. We always say no rural properties. So we have a deal in South Carolina where the borrower has 3 free and clear properties, estimated to be worth over $400,000. They're out of bankruptcy 1 year. They have this, this sad story about, premature babies and having to close down the restaurant, which is one of the buildings. And, the story, they have a lot of assets, like I said, a lot of assets. And most of the most lenders out there will not lend in these type of situations. But we basically built a good package, and we took it to one of our investors, and we basically said, you're going to be under 25% loan to value. We're cross-collateralizing 3 properties, and we're going to get the loan done. So, but to answer your question, if we have a really low loan to value, that's really the motivation to go into states that we haven't been into yet. Land loans still at 50% in your minimum maximum loan amount. Land loans are not at 50%. Land loans are, 25%, 30%, 10%. If you got land loans at 50%, go for it. Minimum loan amount is $30,000. That's what we closed one today for $30,000. Maximum out of our deal here is about 500. Once we get about 500, we can make exceptions up to 900, but we're not trying to be the kings of big loans. We rather have a lot of little loans. So, and then if we go above that number, sometimes we code broker to deal with one of our other lender friends that like bigger loan amounts. Do you allow seller carry seconds? You know what? The seller carry seconds is not a problem with me and with us, because the seller with the second is taking on the risk. What we do require, though, is that the borrower's got to have some skin in the game. We don't do any no money down deals. We just don't want to deal with borrowers that are 100% leveraged at this time. That could change in the future. We never close in the second position. Bender paid a terrible price for that mistake, so I don't see that happening for us. But never say never. Okay, so that seems to be all the questions. Hey, listen, everybody, thank you for staying online. If you have any more questions, call me. If you got any deals you want to run by me, I'd love to hear from you. Let's make some money together. We're closing a lot of loans. We got a lot of money. We got a lot of money we want to put to work. We need your help. Thank you for taking time out of your busy day. I will post this if you want a copy of it. Just shoot me an email. Talk to you soon. Have a good night.